Welcome back to Dreamlit Equity Research. Today we're covering Eli Lilly and Company, NYSE ticker Eli Lilly. As of May 2026, Lilly's market capitalization has passed $1 trillion, making it the most valuable healthcare company on record. That scale is built primarily on one molecule, tirzepatide, the dual GP and GLP-1 receptor agonist sold as Mounjaro and Zepbound, which became the world's best-selling drug by revenue in the third quarter of 2025. In this video, we'll walk through the company's history, business model, financials, pipeline, manufacturing footprint, competitive position, the risks, an investment thesis framework, price scenarios, and a quarterly monitoring checklist. This is a research note, not financial advice. Do your own due diligence. Let's begin. Before going further, a quick note on scope. This content is for educational and informational purposes only. I'm not a licensed financial advisor, and nothing here is financial, investment, legal, or tax advice. Views expressed are analysis, not recommendations, and they can change as new data comes in. Investing carries risk, including loss of principal. Do your own research and consult a qualified professional before making investment decisions. Let's start with the current numbers. Market cap is approximately $1.0 trillion, up from roughly $80 billion in January 2020, about 12 times growth in 6 years. FY 2025 revenue was $65.2 billion, up 41% year over year. The most recent quarter, Q1 2026, came in at $19.8 billion, up 56% year over year, so the growth rate is accelerating rather than slowing. FY 2026 guidance sits at $82 to $85 billion, implying another 25 to 30% growth year. Gross margin is 83%, up from 68% in FY 2022, reflecting the shift toward higher margin GLP-1 products. Return on capital employed is above 40%, comparable to companies like Apple and Microsoft on that metric. The 52-week trading range is $730 to $1,250, a wide band that reflects how sensitive this stock is to quarterly data and pipeline news. In short, a large, mature company posting growth rates usually associated with much smaller firms, which is unusual and worth understanding rather than just admiring. Lilly's history spans 150 years, and it's useful context because the company has been through real crises before. Founded in Indianapolis in 1876 by Colonel Eli Lilly, a pharmacist focused on manufacturing consistency. In 1923, Lilly became the first company to mass-produce insulin, transforming type 1 diabetes from a near-certain death sentence into a manageable condition. In 1982, Humulin, developed with Genentech, became the first recombinant DNA drug, an early bet on biotechnology. The 1990s brought commercial success with Prozac, but the 2000s brought a reckoning, patent expirations, and in 2009 a $1.42 billion DOJ fine for off-label marketing of Zyprexa, at the time the largest criminal pharmaceutical fine in U.S. history. That period forced a shift toward R&D investment. In 2014, Trulicity gave Lilly its first GLP-1 drug and its manufacturing know-how in the class. Mounjaro followed in 2022, and Zepbound, the obesity version, in 2023, with clinical trials showing roughly 20% average weight loss versus about 14% for Wegovy. By 2025, tirzepatide had become the top-selling drug globally by revenue. That's the backdrop for everything else in this report. Lilly organizes around 4 business pillars. Cardiometabolic is the largest, over 60% of revenue. Mounjaro did $11.5 billion in FY 2024, Zepbound $4.9 billion in its first full year. Foundayo, the oral GLP-1 pill, chemical name orforglipron, received FDA approval in April 2026, and retatrutide, a triple agonist targeting GLP-1, GP, and glucagon receptors, is in Phase 3 after Phase 2 data showed 28.7% average weight loss. Oncology is roughly 18% of revenue, anchored by Verzenio in breast cancer and Jaypirca, which passed $600 million in annualized revenue in its second year. Immunology includes Taltz, generating about $2.4 billion annually, though biosimilar competition is expected before 2030, and Omvo and lebrikizumab, which compete against Sanofi and Regeneron's Dupixent. Neuroscience includes Kisunla, donanemab for early Alzheimer's, approved in 2024, plus newer bets from the Verve Therapeutics and Site1 acquisitions in gene editing and pain. The overall picture, GLP-1 is the dominant driver today, but there are several other franchises generating real revenue independently of it. The financial trajectory. Revenue grew from $28.5 billion in FY 2022 to $65.2 billion in FY 2025, close to tripling in 3 years. Net income went from $5.5 billion in FY 2023 to $21.8 billion in FY 2025. EBITDA margin expanded from 28% to about 42% over the same period, which is what happens when a high fixed cost business scales. Most of the R&D and trial costs are already sunk, so incremental revenue drops through at a high rate. Gross margin is expected to dip slightly to around 82% in FY 2026 as new manufacturing capacity comes online before resuming its climb. Return on capital employed has moved from 22% in FY 2022 toward an estimated high 40% in FY 2026. Debt to EBITDA has fallen from 1.9 times to about 1 times, and the company continues to raise absolute R&D spending from $7.2 billion in FY 2022 to an estimated $13 billion in FY 2026. Cash on hand, at roughly $3.2 billion, is comparatively modest. The company is deploying capital into manufacturing and R&D rather than holding it. This is a high-growth, margin-expanding, deleveraging profile, which is uncommon at this revenue scale. The pipeline is where the next several years of growth are supposed to come from. Foundayo, orforglipron, is now commercial as of April 2026, an oral GLP-1 pill without the food and water restrictions that limited earlier oral attempts like Novo's Rybelsus. Trial data showed about 16% body weight reduction. Because it removes the injection barrier, it opens the drug to patients who wouldn't use an injectable, which is a meaningful expansion of the addressable population, though how large that expansion actually turns out to be is still unproven in the real world. Retatrutide, the triple agonist, showed 28.7% average weight loss in Phase 2. For comparison, bariatric surgery typically achieves 25 to 30% excess weight loss. With an NDA filing expected in the second half of 2026, assuming Phase 3 safety data holds up. Tirzepatide is also being studied in sleep apnea, already approved in 2024, heart failure with preserved ejection fraction, and MASH, a liver condition linked to obesity. On the non-metabolic side, Kisunla continues to expand in Alzheimer's. Lebrikizumab is competing against Dupixent in atopic dermatitis, and there's early-stage work in KRAS-targeted oncology and gene editing following the Verve Therapeutics acquisition. In total, Lilly has roughly 40 active clinical programs. The growth thesis doesn't depend on a single drug, though it depends heavily on the GLP-1 franchise specifically. The most consequential operational problem Lilly faced in 2023 and 2024 wasn't clinical or regulatory. It was manufacturing capacity. Zepbound spent time on the FDA drug shortage list. Some patients turned to compounding pharmacies, and Novo picked up share simply by having more physical supply available. In response, Lilly committed roughly $65 billion to new manufacturing capacity across sites, including Branchburg, New Jersey, for tirzepatide API, Lebanon, Indiana, for small molecule, and, more recently, gene medicine production, and European sites in Alzey, Germany, and Limerick, Ireland, to diversify supply outside the U.S. About 75% of manufacturing capacity remains U.S. and Puerto Rico-based, which offers some insulation from proposed pharmaceutical import tariffs but doesn't eliminate the exposure entirely. By geography, revenue breaks down as roughly 64% U.S., 15% Europe, 7% China, 6% Japan, and the remainder elsewhere. The U.S. concentration cuts both ways. It's where GLP-1 pricing is highest and where Medicare coverage expansion could add volume, but it's also where policy risk, Medicaid coverage rollbacks in some states, and IRA pricing negotiation down the road is most concentrated. On competitive positioning, Lilly trades at roughly 30 times forward earnings with a GLP-1 position described as the clinical leader, given the dual GLP-1 mechanism. Novo Nordisk, the closest comparison, trades at roughly 22 times forward earnings and has actually guided 2026 revenue down 5 to 13% year over year, a sign that its U.S. share losses to Lilly are now large enough to shrink total company revenue. Pfizer, AstraZeneca, and Roche are all present in the space to varying degrees, but are earlier stage or peripheral in GLP-1 specifically. In a head-to-head trial, tirzepatide showed roughly 20.2% weight reduction versus 13.7% for Wegovy. That gap is the primary driver of Lilly's U.S. market share, which sits above 60%. Foundayo's approval gives Lilly a first-mover position in an oral GLP-1 without major dietary restrictions, which matters in regions where cold-chain distribution of injectables is difficult. None of this guarantees the lead is permanent. Novo, Pfizer, and several Chinese developers all have oral or next-generation candidates in the pipeline. But as of today, Lilly's clinical data and manufacturing scale are the two most defensible advantages. No thesis is complete without the risks, so here they are directly. The most significant long-term risk is IRA Medicare price negotiation. Small molecule drugs become eligible for negotiation 9 years after approval, which for tirzepatide could mean as early as 2031, with historical negotiated price cuts averaging around 40% on selected drugs. A meaningful hit if it lands on a drug generating tens of billions in revenue. Manufacturing execution is a near-term risk. The $65 billion build-out is large and complex, and any delay at key sites could reopen supply constraints. Kisunla carries a real safety consideration. ARIA, a form of brain swelling or microbleeding, that limits its use to carefully screened and monitored patients, echoing the slower-than-expected uptake of Biogen and Eisai's similar drug, Leqembi. Oral GLP-1 competition is intensifying, with Novo's oral Wegovy already on the market and Pfizer's danuglipron in Phase 3. Valuation is a standalone risk. At roughly 45 times trailing earnings, the stock has limited room for a disappointing quarter. Novo Nordisk fell about 50% in 2025 following a single guidance cut, which is a useful reminder that this kind of repricing can happen quickly in this sector. There's also patent cliff exposure on older drugs like Trulicity and Taltz, and ongoing questions around compounding pharmacies and international pricing divergence. None of these individually breaks the thesis, but together they're why this isn't a low-risk holding. It's useful to frame the investment case as a set of beliefs that all need to hold. First, that GLP-1 demand is structural and durable, supported by obesity prevalence near 43% in the U.S. and expanding clinical use in cardiovascular disease, sleep apnea, and other conditions, though this could be undermined if cheaper, comparably effective competitors emerge and compress pricing across the category. Second, that tirzepatide's clinical edge sustains something like Lilly's current 60% plus U.S. market share, a case supported by head-to-head trial data, but one that could weaken if oral formats commoditize the category or if Novo's CagriSema, which has shown over 25% weight loss in Phase 3, is approved. Third, that the current premium valuation is justified by the growth and margin profile, which holds if guidance is met and the pipeline delivers, but which has essentially no margin for error, as the Novo Nordisk repricing in 2025 demonstrated. None of these beliefs is certain. A long-term holder needs to be comfortable that all three can plausibly hold at once, and needs to be able to tolerate real volatility if any one of them is tested. On valuation scenarios, as of May 2026, the stock trades around $1,065, with a 52-week range of $730 to $1,250. In a bear case, price targets fall to roughly $500 to $600, around 40% downside. driven by weak oral GLP-1 uptake, disappointing retatrutide data, broader Medicare pricing action, or a derating from 30 times to the high teens on forward earnings. In a base case, where FY 2026 guidance of roughly $80 to $83 billion is met and market share holds, targets run $950 to $1,100, implying modest upside with a slight multiple re-rate. In a bull case, retatrutide exceeding 25% weight loss, Alzheimer's franchise expansion, and dominant oral GLP-1 uptake globally, targets move toward $1,300 to $1,500. Current sell-side consensus across roughly a dozen analysts centers around a 12-month target near $1,200 with a strong buy rating, though it's worth remembering that consensus targets tend to lag reality in either direction when a stock is this volatile. In more detail, trailing PE on FY 2025 actuals is around 46 times. Forward PE on FI 2026 estimates closer to 28 to 30 times. By comparison, Novo Nordisk trades near 4 times forward revenue versus Lilly's 8.5 times, roughly double. A gap the market is pricing in based on tirzepatide's clinical edge, oral first-mover status, and pipeline optionality that Novo currently lacks. That premium is conditional. It holds if FI 2026 guidance is achieved and retatrutide advances without major setbacks, and it compresses meaningfully back toward 20 to 22 times, implying 25 to 30% downside, if either assumption breaks. A discounted cash flow model using roughly 13% compound revenue growth through 2031, an 8.5% discount rate, and a mid-40% terminal EBITDA margin produces a value range of about $950 to $1,150 per share, with upside toward $1,300 if oral GLP-1 and Alzheimer's both perform well. The honest takeaway is that this valuation requires sustained execution, not just continued demand. For anyone tracking the stock quarter to quarter, a few things matter most. On earnings, whether revenue is tracking toward the $82 to $85 billion full-year guide, whether gross margin holds near 83%, and whether guidance gets reiterated, raised, or cut. On the pipeline, the timing of the retatrutide NDA filing, expected in the second half of 2026, and any safety signals in that data. Kisunla's prescriber adoption in Europe and Japan, and early Foundayo prescription volumes, which will be the first real read on oral GLP-1 uptake. On manufacturing, whether shortage notifications for Mounjaro and Zepbound continue declining, and whether the Branchburg and Lebanon sites hit their capacity targets on schedule. On policy, any developments on IRA Medicare negotiation timing, Medicaid coverage decisions at the state level, and proposed pharmaceutical import tariffs. The next major catalyst is Q2 2026 earnings, expected around August 2026. The first quarter with meaningful Foundayo revenue data and likely commentary on the retatrutide filing timeline. To summarize the full picture, Lilly holds the most clinically differentiated GLP-1 franchise in the market, is midway through a $65 billion manufacturing expansion, and has a pipeline orforglipron, retatrutide, donanemab, and earlier-stage oncology and neuroscience assets that could support continued double-digit growth if execution holds. What stands out relative to peers? Novo Nordisk is losing U.S. share and guiding revenue down. Pfizer and AstraZeneca are both smaller in this category in earlier stage. What we'd flag as strengths: GLP-1 revenue growing quickly off a large base, a plausible path for donanemab and oral GLP-1 to expand the addressable market, and a manufacturing investment designed to remove the supply constraint that hurt the company in 2023 and 2024. What we'd flag as concerns: a valuation near 45 times trailing earnings that prices in a lot of continued success. Manufacturing execution as the single largest near-term risk. IRA pricing negotiation as a real, if longer-dated, headwind, and binary risk around Kisunla's FDA and safety profile. Price scenarios range from roughly $480 to $580 in a bear case to $1,300 to $1,600 in a bull case, a wide range that reflects genuine uncertainty, not just market noise. that covers the research note on Eli Lilly and Company. Briefly, the core points. Tirzepatide is currently the best-selling drug in the world by revenue, with U.S. share still above 60% and rising. The pipeline, an oral GLP-1 pill, a triple agonist candidate with the highest weight loss data recorded in a trial to date, and an approved Alzheimer's drug, gives the company more than one growth driver. Financially, the combination of 40+% revenue growth, 83% gross margins, and rising return on capital is genuinely uncommon at this scale. At the same time, the valuation leaves little room for error. Manufacturing execution is not yet fully proven, and IRA pricing negotiation is a real long-term risk rather than a hypothetical one. This is not a low-risk stock. Whether it's a reasonable one depends on your own view of execution risk and time horizon. As always, this is a research note, not a recommendation. Do your own research and consult a qualified professional before making investment decisions. Thanks for watching. We'll see you in the next one.